All right, hello and welcome back to the Broken Business Models podcast. We're your hosts, Ryan and James. Before we get into today's podcast, just a quick disclaimer how we start each of these podcasts. Nothing in this video or any of our other material should be taken as investing advice. We frequently talk about highly volatile or otherwise risky investment ideas. So make sure to do your own research and your own work and consult a professional before making any investment decision. Now, before we get into the topic of today's video, if you haven't already, it'd mean a lot to us if you would consider checking out our website, differentiatedanalytics.com, if you haven't already. If you sign up to our premium investor resources on this website, you'll get access to our original short selling research. So, our professional quality full write ups on our best short selling ideas. You also get access to some of our real-time market data that we collect for things like airline ticket prices and cruise line ticket prices, as well as real-time weather data. And we also have a tracker for all the currently active merger arbitrage opportunities in the US markets. To our knowledge, this is the only free weekly updated list of this kind available today. And finally, you get access to our Discord server where we talk about stocks, and members can also, through the Discord server, request certain topics for us to cover in this podcast. So, with that being said, it means a lot to us if you could check that out. And if you subscribe now, you can get a 50% off discount locked in if you use the code WSM50 at checkout. So now the topic of today's podcast is going to be one of the SPAC companies called PureCycle Technologies, which went public via SPAC in early 2021. Their business model has to do with a new technology for recycling hard to recycle materials, certain hard to recycle types of plastics. Um, uh, but over the course of the past few years since they went public, they've run into some uh, kind of cascading difficulties in their business. So, with that being said, I'll kick it over to you, James, to explain what is PureCycle, what do they do, and why are they so interesting?
So PureCycle focuses on the recycling of polypropylene. And polypropylene is a type of plastic that it's very commonly used in a lot of things, especially food packaging. But it's also extremely difficult to recycle. And here, this is a screen grab from PureCycle's SPAC presentation. And they explain that currently less than 1% of polypropylene is recycled. The reason for this is because the traditional method of recycling polypropylene, uh, creates a very unpure product, which is the recycled polypropylene is not as pure as virgin polypropylene, and because of that, the output is not food safe, so it cannot be used in food packaging containers, etc. Therefore, it's not as valuable, and because it's not as valuable, it doesn't make economic sense to recycle it. That's why only 1% of polypropylene is currently recycled. PureCycle claims that they have a new technology, a better method of recycling polypropylene, which can create very pure recycled polypropylene, which is food safe and therefore can be used in food packaging, which makes it way more valuable. So that's the whole selling point. So how did PureCycle obtain this new recycling technology? Well, the this new method of recycling was actually developed by Procter and Gamble back in 2013, and then in 2015, Procter and Gamble sold the intellectual property to PureCycle. PureCycle used to be called Inventor. They eventually changed their name. But then, so in 2015, PureCycle acquired, the intellectual property and the patents and whatever from P&G. And then since then, they've been working on building a facility where they will implement it and start recycling plastic. So now it goes on to their SPAC presentation. This is released. They went public in 2021. So this SPAC presentation was released in 2021. This is a CGI rendering of the facility that they plan to build in Ironton, Ohio. And the construction had already started by this point, and they expected that construction would be completed by the second half of 2022. And that's when they would begin recycling the plastic, selling the recycled plastic, and generating revenue. They said that the facility, once completed, would have the capacity to recycle 107 million pounds of polypropylene per year. So, how much would 107 million pounds of polypropylene be worth? So, they claim that they could sell it for 90 cents per pound. And this is based on letters of intent they had with potential customers. And then obviously, it costs them money to buy the feedstock, and the feedstock is the plastic waste that they recycle, and then the operating costs. And they said that they would make 42 cents per pound of plastic of free cash flow. So for each pound of plastic that they recycle, they sell that for 90 cents and they generate 42 cents of free cash flow. If we scale that up to the 107 million pounds of annual capacity, this facility could make $45 million of free cash flow per year. So this is what they claimed would be the profitability once completed. Again, they were targeting completion for their first facility in October of 2022. And then they had very ambitious plans to eventually build 50 facilities by 2035. And so each facility, they said, would cost them about $250 million. So it cost them $250 million to build the facility. Once it's up and running, it's generating $45 million of free cash flow per year. And then so that's a 5-year payback period on the investment, which sounds pretty good if they can actually execute on these plans. Now, shortly after PureCycle went public, it became the target of short sellers. So in May of 2021, just a few months after they went public, they were the target of a short report by Hindenburg Research. More recently, in 2023, they were also the target of a short report by Bleecker Street Research. And both of these two short sellers kind of had similar, allegations or things, negative things to say. Both of them said that in the new recycling method that PureCycle uses, they use butane gas, which is a very dangerous and flammable gas. And they also have to heat the plastic up to very high temperatures, which is, a complex and dangerous process. And they said that while, this new recycling method had indeed been proven to work in lab conditions at a very small scale, it would be because of this, dangerous butane gas and the high temperatures, it would be potentially very difficult to scale it up into mass production because of these safety concerns. And also, Bleecker Street Research pointed out that when P&G sold this intellectual property to PureCycle back in 2015, the price of the intellectual property was only $2.5 million. So that's all the intellectual property of this new innovative recycling method was only worth $2.5 million at the time. Well, that shows that maybe P&G knew that this new recycling method would be very difficult to ramp up to a large scale. Therefore, even if it had favorable results in a lab setting, if it's very difficult, maybe even impossible to ramp up to large scale, it's really not worth that much. And so that's potentially why they sold it to PureCycle for such a pittance. So these are, the allegations raised by the short sellers. Now it's been more than 2 years since PureCycle went public, and we can check to see, how well they've actually done. So if you remember, the original plan was to complete construction of the facility in October of 2022. Well, as it turns out, they were not able to do this on time. in November of 2022, they announced that construction was taking longer than expected and the facility would not be ready until the first quarter of 2023. Well, the first quarter of 2023 rolled along and it was still not complete, and they had to delay it again until April of 2023. In April of 2023, they announced that they had indeed finally finished construction of the facility. And then in June of 2023, they said that they had begun operations and begun recycling the plastic. But at this point, it was still on a very small scale, nowhere near the max capacity. In August of 2023, they talk about the fact that they have a bondholder milestone that they need to meet. So they need to ramp up production to a monthly run rate of 4.45 million pounds of plastic per month by the end of the third quarter. And the reason they have to do this is one of their bondholders had a covenant, basically a condition on the bond, saying to PureCycle, you have to reach these operational milestones and show that the business is actually working out. Otherwise, we're going to increase the amount of collateral that you have to post to continue maintaining this bond. So this is really something that the bondholder did for basically security for themselves. They only really want to continue lending money to PureCycle if they can show that they're actually executing on their plan. So that's why they created this milestone that they have to reach this 4.45 million of monthly production by the end of the third quarter. Well, the third quarter rolled around, and during the third quarter, PureCycle only recycled 409,000 pounds of plastic. So this is way lower than the requirement of 4.4 million pounds per month. So they failed to meet that bondholder milestone. So they were able to negotiate with the bondholder, and they kicked the can down the road by another quarter. So now they had that same target of 4.45 million pounds a month, but now they had until the end of the year to complete it. And they said, that's what they were trying to do. But then at the end of the year, in December of 2023, they had some mechanical issues at the facility, including a leaking valve and a mechanical seal failure. And because of these failures, they were forced to shut down the facility for safety concerns. And because of this shutdown, they were not able to meet the bondholder milestone of the production of 4.45 million pounds of production. So they had failed to meet this. So clearly they're in a really difficult situation by this point. They're unable to ramp up their production, and this could have real problems related to their bonds. So in January of 2024, they claimed that in the first 2 weeks of, in January of 2024, they were able to resolve those, safety concerns that caused the shutdown in December, and they brought the plant back online. They said in the first 2 weeks of January, they produced 180,000 pounds of plastic. And if you look at the run rate, 183,000 pounds in 2 weeks, that's a run rate of 366,000 pounds per month, which is still well below that bondholder milestone. And that also equates to 4.4 million pounds per year. And if you think back, they said that the capacity of the plant would be 107 million pounds per year. And then in the beginning of 2024, their run rate is only 4.4 million. So it's like 4% of their target capacity. So they're really not doing well. They're really having problems ramping up production. And they give some more details about, what's causing them trouble. And they said that the transfer of co-product 2 out of the purification system is limited and below design rates. So what does that mean? Co-product 2 is this refers to the various contamination and other materials in the plastic that have to be removed, because remember, this is recycled plastic, so they're getting dirty plastic, from trash cans, and there's some contaminants and other things in it that have to be removed for them to create a pure recycled plastic. And they say, one of these contaminants that they have to remove is called coproduct 2. And they're saying they're having a difficult time. It's more difficult than they expected to actually remove this contaminant. And so that's causing problems with their production. And so to address this, they are shifting their feedstock to a different feedstock that contains lower levels of polyethylene. And I guess polyethylene is associated with this coproduct 2 somehow. So they're basically, what it sounds like is, because they're having problems purifying the plastic, they're going to try using basically higher quality feedstock, in order to alleviate that, so there's not so much contaminant that they have to remove. Well, I mean, that's problematic, because if they can only use higher quality feedstock, that's going to hurt their margins, because it's going to cost them more to buy that feedstock. So that's a huge problem. And then in May of 2024, they said that they are pausing production for 2 to 4 weeks to do some more changes to improve the process, because it's not really working out how they expected. So they're doing yet another shutdown of the facility. And so this is a slide that they produced in their Q4 earnings presentation, and they talk about all the problems that they've had with the factory. So in Q2 of 2023, they had they had problems with some of their seals, and like the sealing things and the various machinery, so they had to have temporary seals. And then in Q3, they had an absorber that leaked, and they had to repair that. And then in Q4, they had some screens, a screen charger that they had to install to address some problems. So basically, the point is, every quarter they're having new problems that they have to solve. And that's why it's been so difficult for them to ramp up production. And this kind of goes to the points that those two short sellers we talked about earlier, Hindenburg and Bleecker Street Research, were saying that this is a very difficult process to scale up. And indeed, PureCycle is having huge problems trying to scale up production. They're now only at 4% of max capacity after more than a year, and they're always having these problems that pop up, and they have to shut down the facility, repair things, start operating it a bit again, and then they need to shut it down again. It's just really not going well. So in 2023, their production was way below their original targets, but they did produce some plastic. And then, so here in November of 2023, they put out a press release saying that they made a first commercial shipment of the recycled plastic to one of their customers. So it sounds okay. Maybe they're not. Maybe they are not. Operating at the full capacity as they had hoped, but at least they're making some plastic and generating some revenue, right? But then, if you look at their financial reports, this is from their 10K. In 2023, they generated zero revenue. So normally, when you look at an income statement, the first line is the revenue, and then you deduct all of the expenses to get the operating profit. But if you look at PureCycle's financial reports, the first line is missing. So what does that mean? That means they did not generate any revenue. But how can that be the case when they have already started making commercial shipments in November of 2023? Well, they say that to date, their product and services sales have delivered minimal revenue. So even if they've generated some revenue, if it's such a small amount that it's not material to their financial results, it's just marked as zero. It's not even included if it's immaterial. So whatever sales, whatever shipment they delivered to this customer in November, it was an immaterial amount of money. So I don't know, maybe it was like $10, $100 of plastic that they sold. So it's such a tiny amount that it doesn't even show up on their financial statements. Yet they're releasing a press release talking about this, even though it's basically too small to matter. And I think that's really a sign of desperation on the part of the company that to keep investors happy, they are to keep investors happy. They are trying to make it look like they're generating revenue, even though these shipments are so tiny, they really don't mean anything. So now let's look at their bonds. As we talked about earlier, they had that bondholder milestone that they kept failing to meet, um, which was related to the amount of production. And those bonds were they called them revenue bonds, and they were issued by the Southern Ohio Port Authority. This is a government-sponsored entity which lends money to businesses that are, building factories in Ohio. And as a condition of the bond, they had various operational milestones that they had to meet, as far as how much recycled plastic they were producing. As we discussed earlier, they continually failed to meet those requirements. So by the end of 2023, it was becoming clear that PureCycle was not going to be able to meet these operational milestones. So they had to, begin negotiations with the Southern Ohio Port Authority of how they're going to resolve this issue, because they're basically in breach of the requirements of the bonds. So, in light of the fact that they were not able to meet the operational milestones related to the bonds from the Ohio Port Authority, they came with a deal where they would buy back. They would use the cash on hand that they have to buy back those bonds, and then that would get rid of the operational milestones. So they would solve that problem. But the problem is they had to massively deplete their cash reserves in order to buy back these bonds. So here I have their pro forma balance sheet after they buy back the bonds, which they claim happened in the first quarter of 2024. So here I have their balance sheet as of December 31st, 2023, but I've changed the numbers to be pro forma for this bond buyback that they did. So after doing this bond buyback, their cash reserves will decrease down to $47 million. And they also have $45 million of restricted cash, but that cash is tied up in like escrow accounts related to other bonds that they have as collateral of things. So they can't touch this 45 million of restricted cash. The only cash that they can actually use is this 47 million dollars of unrestricted cash. And they also have a $200 million revolving credit facility, which they have with a related party lender. And this credit facility expires in September of 2025, and it has a usuriously high interest rate of the SFOR plus 17.5%. And the SFOR, I think it stands for like the standard overnight funding rate. It's basically the same as the federal funds rate. So it's about 5%, plus a margin of 17.5% on top of that. So that's a 22.5% interest rates that they have on this revolving credit facility if they have to draw it. And they probably will have to draw it pretty soon because they only have $47 million of cash left. So they're in a pretty desperate liquidity situation where they're having to rely on this extremely a very small amount of cash, and then they have this extremely expensive revolving credit facility. And while they bought back the revenue bonds, those the ones with the operational milestones, they bought those back with their cash on hand, but they still have a bunch of other bonds, that are still outstanding. And in total, they have $310 million worth of bonds that expire one of them expires in 2030. Another one expires, well, it doesn't expire. They have an equipment financing where they're going to have to start making payments in December of 2024. And then they have, a $40 million bond that's going to expire in 2025. So those most of these payments, most of these bonds mature more than a year from now, so it's not an immediate concern. The more immediate concern is the fact that they only have $47 million of cash left, plus this extremely expensive revolving credit facility. So, how long will that $47 million of cash on their balance sheet, how long is that going to last them? Because, currently they're generating zero revenue. Uh, in 2023, they burned $250 million of negative free cash flow. So at $250 million a year, if we assume that same burn rate, that's like 60 some $1 million a quarter, and they only have 47 million of cash on their balance sheet. So I mean, they've probably already run out of cash by the end of the first quarter, in which case they've probably already had to draw on their revolving credit facility, which, as we said, has an exorbitant interest rate of over 20%. And it was from a related party. So the fact that they had to rely on this extremely expensive revolving credit facility from a related party probably goes to show that there's not a whole lot of interest from third-party lenders to lend any more money to PureCycle, given how disastrously they failed on their operational plans and how it's taken so much longer than expected to actually ramp up production. And given how much cash they're burning, remember they claimed that they expected it would only cost $250 million to finish construction of the facility. Yet over the past 4 years, they've burned $841 million. And as of January of 2024, the plant was only operating at 4% of capacity. And in May, they had to shut it down because they're doing some more upgrades or whatever to it. So the facility, it's not even really completed because it's not operating anywhere near the max capacity that it's supposed to be able to do. So they spent way more money than expected, and the facility's not even really working as intended. Like not even close. They're only making 4%. They're only operating 4% capacity. So this has been a complete failure of a business. They're about to run out of cash, and I find it very difficult to believe that any third-party lender would be willing to lend the money at this point. So they're probably going to have to start relying on dilutive equity raises. In which case, given how much cash they burn, that could dilute the stock very quickly. And all things considered, given what a disaster PureCycle has been, I think the most likely conclusion is that the short sellers were correct in thinking that this new innovative recycling method they have, maybe it worked in lab conditions, but it's not working at mass production. It's not working, at large scale. And that's why, because PureCycle has been having so many issues just trying to ramp up production, it seems like almost impossible for them to ramp up production, anywhere beyond the measly amount they're making now.
So for the other side of the thesis, the bull side, if it turns out that PureCycle is done with has worked out all of their problems that they keep having more problems. Say like in the next like quarter, they don't have any more new problems, and they're able to um, ramp production. Would it be would that be in time for them to kind of save the business and would they be able to survive in that case in the best case scenario?
Well, remember that they claim at max capacity, they would generate about $100 million of revenue per year and $45 million of free cash flow. But if you look at their operating expenses, the selling and general administrative cost alone was $55 million in 2023. So even if they magically were able to increase capacity at their facility from 4% where it is now all the way up to 100%, magically overnight, they would only be making 45 million a year, which is not even enough to cover their SG&A. So the only way that this business can work out is if they're able to raise more capital and build more plants. But given how much money it's costing them to create this first facility, it's been $841 million of cash burn, and the facility is still nowhere near where it's supposed to be. And then even if it can generate 45 million of free cash flow uh, at max capacity, well, if it costs you $841 million to build that facility, those economics don't look so good anymore. And I think this would potentially make it very difficult for them to solicit more money from third party bondholders. Given how disastrous their track record is. So this is a company that's going to continue to need to consume a lot of cash for the foreseeable future. And they're running out of cash. And I think it's probably going to be difficult for them to find financing for very much longer. Well, I think that about wraps it up for everything we had to talk about PureCycle today. As always, if um, if you have any thoughts about PureCycle, please feel free to leave those in the comment section below. And thank you all for watching, and we will see you on next week's video.